as crazy as everything is here in the US, and there is a lot of crazy, getting crazier every day, there might be even more crazy things going on in mainland China. And the Chinese Communist Party is having to deal with a lot of different things right now, whether it's Hong Kong, whether it's Taiwan, whether it's the flooding, whether it's the banking system, whether it's still the global pandemic. Also the Asian flu and the swine flu and the bubonic plague and a bunch of other things. Protests, there were protests at least, over higher food prices and rent. So the flooding, I think, is starting to cause an immense amounts of problems in certain parts of China. The flooding has gone on for days and days and days. I think some places it's over 40 days in a row of rain that is causing flooding, and the soil is not able to handle this. And the dams in China, whether it's the Three Gorges Dam and others, are not able to handle this as well. The floodgates were opened on many of these dams without warning the local townspeople, and construction crews were ordered to divert the flooding water into poor towns, farm towns. So those towns were underwater and people's property was destroyed. The farmland was destroyed, and property rights are extremely dicey in China. But I've read stories where people's cars were destroyed when the water was diverted and flooding. Poor people's cars were destroyed and their farmland was destroyed. And they're not going to be compensated at all for any of the damages. And unfortunately, here in the West, the Western media, which I think is on the Chinese government payroll, or at least the Chinese government is paying the Western media, according to China Uncensored, for favorable coverage of the Chinese economy. Also, Ray Dalio is doing paid infomercials every 3 to 4 months now promoting how good the Chinese economy is. The Western media has really dropped the ball. There is very little, if any, coverage of the flooding in China, problems with the Three Gorges Dam. Kyle Bass had to tweet out about the Three Gorges Dam a couple days ago, and still I think the Western media just totally ignored it. They've been ignoring it for weeks. The problems have been getting worse for weeks. Really, the best job of anyone that's here in the United States doing coverage is, it's for free on YouTube now. It's China in Focus. So you could go to their YouTube channel. I've been following their YouTube channel since it was really small. There's claims out there that they're only propaganda, but they're actually getting leaked documents directly from inside the Chinese government and Chinese officials. There's leaked reports, leaked documents. They have good sources. They're interviewing people, boots on the ground with reporters, people risking imprisonment or worse in mainland China, getting interviews, getting stories. So I think they're on point. They're doing a really good job. Let me play this short little clip from the July 15th China in Focus. Now they have over 500,000 subscribers, but I was following the channel, I think when they had like 10,000 or 20,000 subscribers. So it's grown immensely in just the last 8 months. I think they've been around a little bit over 6 months. It's under a year though, I'm pretty sure. So let me just play this clip about food prices soaring too, in addition to that, and then we'll get into the main story here with how so many Chinese financial institutions and Chinese insurance companies now, because look, with all this flooding, the insurance companies I don't think are going to be able to pay out. And even then, the legal laws for insurance companies covering the flooding, they're not going to cover a good amount of it, but the policies that were written, they're not going to be able to pay those either. Okay, let me play this clip.
Since June, torrential rains and flooding have drenched almost 30 provincial-level regions in China. The downpours have affected nearly 40 million people and caused billions of dollars in damages. Farms and villages have been flooded, dams, houses, roads, and bridges have been washed away. Yet no senior Chinese Communist Party officials have visited the affected regions in more than a month. China's premier made the first visit to an affected city in northwestern Chinese province Guizhou on July 6th. But the area wasn't one of the worst hit. Communist Party leader Xi Jinping never appeared in the floods-affected areas. Beijing has allocated a total of $44 million for flood disaster relief. Based on the official figure that close to 40 million have been impacted, that equals less than $1.50 of relief funding per victim. Not to mention, this money will not be directly distributed to people. Instead, it's earmarked for restoration projects. Following recent reports of skyrocketing pork prices, other foods are now becoming more and more expensive too. Based on official statistics, China's food prices were up more than 10% in June. Some Chinese residents say food prices have even tripled. Experts say the prices will continue to rise, adding to the pressure on Chinese household budgets as incomes fall. Low-income groups will likely suffer the most. Price inflation has disrupted China's supply and demand chain and led to closures and slowdowns in factories, restaurants, and retail.
Okay, that's it for the short little clip. So let's get in. So China's dealing with a lot of things right now, and I think because of the stagflation in the real economy from a lot of currency being created. Now, if you want to understand how this currency scheme goes in China, there's a former financial professional. He doesn't go by his real name. He's on Twitter and also a blog. He's Deep Throat IPO on Twitter, and he talks about how inside China there's massive amounts of currency creation since 2009. An unbelievable amount of currency and credit has been created, almost infinity, tens of trillions of dollars worth of currency and credit, and yet the international exchange rate for the Chinese yuan to the dollar, let me pull it up right now, is still it's completely manipulated, completely managed by the People's Bank of China. So they defend the international exchange rate. It's manipulated. People would not know all the crazy stuff that goes on in the Chinese economy based on the foreign exchange rate of the Chinese yuan to the dollar, which is still stuck a little bit below 7. So it's not having any problems. The gold price right now in Chinese yuan is not going crazy. It looks like it dropped quite a bit towards the end of June, and it's been rallying, but it hasn't gone parabolic or anything like that based on what's been happening in the Chinese economy with the flooding. And the People's Bank of China also has given some really interesting cautious comments about how they will provide emergency liquidity, but they also want to take it out. So they are very, very worried about if they do a lot of emergency liquidity injections, if the liquidity stays in the economy and sloshes around for a while, it will start to cause even worse, probably, consumer prices with stagflation. It already caused in the last 10 days a big pop in the stock market, and then there was a big correction. And the Chinese stock market had not even done very much, I think, in the last 5 years. So the Chinese stock market was very disappointing up until the last 10 days when there was a very, very big pop. And then after a big pop in the stock market and lots of speculative behavior started rolling into the stock market again, the Chinese government officials started to get very, very worried about it, that it was going up too quickly. So let me get to the main article here. I have another article from the Associated Press about China blast. They blew up another dam to release floodwaters as the death toll rises, and also about how not just at the Three Gorges Dam, where, by the way, unfortunately, I think the townspeople right below the dam were not warned ahead of time. And one of the reasons that the floodgates would be open for the Three Gorges Dam to lower the water levels in the reservoir section. And there's a reason for that. There's articles going around saying if the Chinese government, the Chinese Communist Party, doesn't warn the local townspeople, then they don't, and just says it was an accident or an act of God, then they don't have to pay any claims. So I think that's part of their laws. So they've been releasing the floodgates for a lot of these dams all over China without warning the local townspeople. And there's people in the gold community rooting for the Chinese government, rooting for the Chinese Communist Party. Do they have any common sense? I don't trust any government at this point, and some of them are worse than others, but I can't believe anyone would trust the Chinese Communist. If you're an American, I can't believe anyone would trust the Chinese Communist Party at this point. They don't seem to care about human life. If they're not warning anyone right below the dam and they open the floodgates, that's just horrible. Okay, so let me get into the article. 9 Chinese financial institutions with over 1 trillion yuan in assets are nationalized on the same day. I was around in 2008 and 2009. I was starting to learn. I was speaking to my sources. I was paying a lot of attention. And we never got to anything as crazy where all these institutions were all nationalized on the same day. I mean, over a couple months, yes, things were crazy and bad, but not in a single day. This is a new record of craziness with all these nationalizations and bailouts in a single day. Perhaps it's a coincidence that just 2 days after we reported that China has been rocked by an unprecedented surge in bank runs, which forced local regulators to publicly vouch for the soundness of its lenders as the police halted the run. On Friday, Chinese financial regulators took over a record 9 financial institutions, which they said broke rules and added risk to a financial system facing increasing headwinds from the global pandemic. Or perhaps the two are in fact connected, and as faith in China's financial system sinks, and more money is pulled out of the country's insolvent banks, more banks will be bailed out or nationalized. And for those of you who are new to my channel, I was warning about this last year. A lot of things were papered over, starting with Baoshang Bank in May, and there was a bunch of bailouts, crazy different types of rules changes and bailouts. The Chinese interbank lending system had a system-wide failure where an enormous spike, I think it was June or July. It was late May or early June, actually. So there was a handful of bailouts, and there was weird types of bailouts where Chinese sovereign wealth funds and the large Chinese state-owned enterprise banks were asked to do the bailouts. So it was really weird to see a sovereign wealth fund do a bailout, and in the Hunan province had to be bailed out an enormous sum by a large Chinese state-owned enterprise bank. That was just shocking to me. That was really the big shocker, where an entire Chinese province that's supposedly one of the wealthiest ones in China had to be bailed out by one of China's 2 largest state-owned enterprise banks. So that was last year. So things were delayed. They didn't happen initially last year with problems, but now this flood seems to be exacerbating a lot of the problems in the Chinese banks and Chinese insurance companies with their wealth management products and their shadow banking system and other derivatives losses, other bad loans and derivatives losses. Whatever the case, the takeovers of 4 insurers now, and it makes sense that the insurers would be in a problem now because, look, you have all the flood insurance and all the other problems that are being caused by that, and the insurance companies are not going to be able to pay out. So, of course, they're going to say that they're not going to be able to pay out or there's problems. Insurance companies always do this, but this is the problem with an enormous scale natural disaster. It happens in the U.S. too. So you have like a scenario with different hurricanes like Hurricane Harvey or others, where if a natural disaster, or there's too many natural disasters in too short a time, the insurance companies can't pay out. The takeover of 4 insurers, 2 trust firms, and 3 securities companies that managed a combined 1 trillion Yuan or 143 billion in assets represent Beijing's first major regulatory move this year and follows the extensively documented bailouts of several regional lenders last year, I would add starting in May 2019 with Baoshang Bank. Among the companies taken over the China's Banking and Insurance Regulatory Commission are Huaxia Life Insurance Company, Tianjin Life Insurance Company, Tian'an Property Insurance Company, and Yuan Property Insurance Company, the regulator said on its website. Meanwhile, China's security regulator said it would take over 3 other entities, New Times Securities, Guosheng Securities, and Guosheng Futures, and 2 trust firms, New China Trust and New Times Trust Company. The regulator said the takeovers are aimed at ensuring, quote, stable operations of the firms because, well, what else can they say? Most other Chinese financial institutions are insolvent, and this is just the beginning. It's probably not just, actually, wait a second here. I got to reread that. What else can they say? Most Chinese financial institutions are insolvent, and this is just the beginning. Probably not. The takeovers continue an effort launched by Chinese authorities in 2019 to prevent systemic risk by taking over failing banks, something Beijing had not done in decades over fears of sparking bank runs, while also curbing debt as the country's growth slows. Meanwhile, like I said, this goes back to what Deep Throat IPO has said, that the exchange rate, the foreign international exchange rate of the Chinese yuan to the dollar, is very carefully managed to prevent the Chinese currency from having problems. So what happens internally in China is very different than the international exchange rate. And hedge fund manager Tavi Costa of Crescott Capital, I interviewed him last year. I also interviewed him a few months ago, I think in March. But I interviewed him last year, and you can go in the archives, and he was trying to short the yuan a number of years ago, and he was told in his Forex trade by his Forex broker that the counterparty on the other side of the trade was the People's Bank of China. So how many other entities in Forex trading will you be dealing with the other country's central bank on the other side of the trade? Okay, just probably that's why you can't, if you're not going to win a trade normally too much if the other side of the trade is another country's central bank with almost unlimited resources. Okay, the takeovers continue, an effort launched by Chinese authorities in 2019 to prevent systemic risk by taking over failing banks, something Beijing had not done in decades over fears of sparking bank runs. I know I reread that, I just recognize that. While also curbing debt as the country's growth slows. Yes, and they're dealing with stagflation now. There was another, and even though the Chinese currency doesn't reflect that, even though the international exchange rate on China's yuan doesn't reflect that. There was another common threat among the insolvent companies. According to the Wall Street Journal, many of the newly nationalized firms have been linked in Chinese media reports to disgraced financier Xiao Jianhua, the founder of Beijing-based Tomorrow Holding, which also controlled Baoshan Bank, a troubled regional lender that was the subject of the highest-profile seizure last year. As a reminder, Xiao, who is now a Canadian national with vast holdings in Chinese financial firms and ties to China's military, disappeared in 2017 from a luxury Hong Kong hotel. According to his company and Hong Kong police, after he entered mainland China in January 2017, he hasn't been reachable since. Which is interesting because there's a there's a Forbes article from 2011 about how I think 72 Chinese billionaires mysteriously died. You can go look it up. Xiao was among Chinese tycoons whose empire fell under intense regulatory scrutiny in recent years, around the time officials cracked down on conglomerates such as Angbang and H&A Group, who had racked up massive debt from global acquisition sprees, forcing them to divest overseas assets such as New York's Waldorf Astoria Hotel, in Angbang's case, and for H&A, a stake in Deutsche Bank. Explaining the takeover of the four insurers, the China Banking and Insurance Regulatory Commission said they had violated China's insurance law and triggered a takeover article that calls for a government intervention if an insurer's insolvency ratio falls below regulatory requirements. The takeover took effect Friday and will last for at least 1 year. The statement said, yeah, it's probably going to last longer than that. Similar to an FDIC quote, Failure Friday event, China's regulator designated 6 big Chinese insurance companies and financial institutions to take custody of the company's business. When China's central bank seized Baoshan Bank last year, it similarly asked a state bank to manage the lender's operations. Also similar to the Baoshan takeover, regulators said the businesses and insurance policies of the seized companies will continue during the takeover. Eventually, regulators will seek to liquidate assets in the 2 trust firms and introduce new investors to shore up capital bases. Meanwhile, as the Wall Street Journal notes, analysts have been warning of rising financial risks this year after the Chinese economy slipped into contraction in the first quarter amid effects of the global pandemic. In response to the outbreak, Beijing ordered the nation's banks to step up lending to struggling small businesses that have long been seen as risky borrowers. As a result, the amount of bad debt in the banking industry quickly piled up in the year's first half and is expected to continue to rise for the rest of the year. And while some economists, perhaps those who are sponsored by China, cough cough, Stephen Roach, cough cough, believe Beijing is better positioned to contain financial risks after China's GDP miraculously rebounded to positive in Q2. Others believe that while Beijing is parading with fake economic numbers to boost its global credibility, the reality is that behind the scenes, China's financial system gets ever closer to collapse. And, the global pandemic, China's manufacturing, the orders being down by some orders being down 70% or more for reports. And then the flooding and all the other problems that are happening now with the China's financial system and the insurance companies having to deal with this. This is a lot of stuff. And then you have the problems in Hong Kong. You have all those banks in Hong Kong. We're going to see if Kyle Bass is going to be right soon, probably. It's going to spill over, probably. There's going to be Hong Kong banks that have a lot of are connected to these financial institutions in mainland China. So you'd think that the Hong Kong banks are going to start having some big problems soon. The reality is that behind the scenes, China's financial system gets ever closer to collapse. Indeed, Sheng Zhengyang, an analyst at Northeast Securities, said some corners of China's financial system could turn more vulnerable in the wake of the global pandemic. Quote, regulators are more eager to stabilize the financial markets as the broader economy worsens, said Mr. Shen. Quote, a direct takeover allows for more efficient coordination. And people say China has capitalism. Maybe at smaller levels. But the larger institutions, the larger firms are all being gobbled up and nationalized, even at a faster pace than in 2008-9 with the U.S. Meanwhile, the toxic feedback loop of bank runs, bank failures, and bank nationalizations, leading to more bank runs, more bank failures, and more bank nationalizations, will only accelerate until a critical mass is finally hit, or the crypto Yuan is launched soon, because the crypto Yuan is now being tested at China's version of Uber, their ride service Didi, and at their grocery store delivery chain. So they're testing crypto Yuan. They are moving it forward with testing, with more aggressive testing in the real economy. Will only accelerate until critical mass is finally hit, at which point Beijing will find it impossible to quietly force large state-owned banks to bail out an increasingly greater percentage of the country's smaller, medium-sized banks. So in theory, China bulls will tell you they can print unlimited yuan inside their own economy. But what the People's Bank of China is saying, and I will attach articles if you want to read the comments over the last month from People's Bank of China officials, is that yes, they will provide liquidity, but no, they do not want to keep the liquidity in the system. They are worried about much, much worse inflation and the velocity of money picking up. So yes, they will provide short-term liquidity, but they want to pull it out as fast as possible. And this is very similar to what the Federal Reserve did with the tens of trillions in currency swaps in 2008, 2009, 2010. They started, as Dr. Ron Paul told me in interviews in the archives, they started trying to pull that emergency liquidity out because they were worried about the ramifications. Okay, I'm done with this, with the content part of the live stream show. Let's get to the super chat questions. Super chat from Jonathan Howe. Thank you for the super chat, Jonathan. He is also a Patreon account contributor, I believe, one of over 1,000 now, contributing $5 a month. There is a lot of content behind the paywall, over 100 articles, charts, and audio podcasts. I have a number of ideas. I am working on the oil article, so hopefully after this, I will feel good enough after this live stream show to start working on more Patreon content. I have a couple other ideas of things. There might be 2 pieces of content out in the next 24 hours. I have some good ideas for things based on your comments, based on feedback from patrons. Okay, so let's read your question. What is your opinion on EXK, Endeavor Silver, and USAS, which is America's Gold and Silver as silver stocks? I hold shares of both. Should I sell them and buy Pan American Silver and Mag Silver instead? Thanks. Okay, so this is the problem with owning individual mining companies, is there could be problems at mines, there could be problems with management. The problems could be unforeseen, and if the silver price is rallying, some of your individual silver miners may lag. And then people start to worry, and then some people say, those silver ones are undervalued, I should buy those. And I was going to address this in an audio podcast. So I don't own a lot of individual silver miners for the reason that Endeavor Silver, their management team philosophy is not owning large mines. So the odds of them being taken out, as Rick Roll of Sprott would say, are very low. So they're on their own. So they buy, really, if you're not familiar with their business model, it's different than a lot of other silver miners, because normally a smaller silver miner, and they're medium-sized now, but they started off as small, because I've been around the gold and silver mining industry for a long time, over a decade now. They started off really small, and they would buy up really, really old mines, and their geologists would think that they could find more reserves there and that they could start getting cash flow with a smaller mill. So they wouldn't put a lot of capital into it, and then they would upgrade things a little bit as they go, with profits. Now, this is an efficient way to generate cash flow. The problem is that the odds of getting acquired, so if you need to get bailed out, and an acquisition is really a bailout in a lot of cases, unless it's a really good mine like Mag Silver. So I can't tell you to go and buy this company or that company. Pan American Silver can't give you financial advice like that, but I could just tell you, in my opinion, that Pan American Silver and Mag are way better run than Endeavor Silver and America's Gold and Silver. America's Gold and Silver actually has a fairly small, fairly easy mine, but this is the risk of buying an individual junior producer. They were supposed to be at commercial production, I think in November or December 2019. And yes, there was the pandemic, but America's Gold and Silver with the Relief Canyon mine in Nevada was having problems before the pandemic. And this is the risk you always take with buying individual mining stocks. The average retail investor who doesn't have experience in the sector does not understand any of the risks. How do I know this? Because I've had long conversations with hundreds of them. And the ones who say they know the risk, they buy individual shares anyway, and then they end up sending me messages and they don't trust me. They say they understood the risk and then they buy the shares anyway and they don't understand the risk. So no, I don't like Endeavor Silver. I don't like America's Gold and Silver is a partner with Sandstorm Gold, but I have exposure to that mine through the gold stream and the royalty for Sandstorm Gold and any exploration upside. So I don't buy a lot of individual mining stocks. For the average retail investor out there, people send me names all the time of junior miners, of producers. Unless you understand the risk really, really well and you have high risk tolerance and you understand the mining industry, you have to be really careful about buying individual mining companies. Pan American Silver is way better run. Management team has a very good track record. They might have a little bit of problems here or there, but they don't run the risk of going bankrupt. Like a junior miner who has to bet the whole company on one or two mines. 8 months ago, fourth quarter 2019, first quarter of 2020, Endeavor Silver was having big problems. I have not looked at their financial statements lately, but with a higher silver price and lower oil, they should be better, but I haven't looked. Super chat, do I think the floodings are an act of weather warfare? I think Chinese state-run media might blame it on that. Or would it be, I know Hugo Chavez was blaming the U.S. for that, but he blamed everything on the U.S. Even when him and his buddies were stealing everything in the Venezuelan economy and destroying their oil industry, everything was on, all the blame was on U.S. sanctions, no matter what. Would it be possible that the Chinese might be thinking this? Chinese state-run media will say anything to deflect blame. So I don't know if the floodings are an act of weather warfare. China, historically, Wally, thank you for the super chat, by the way. Historically, China has had a lot of rains and flooding in certain parts of China. So this is not an aberration. I would have liked the Chinese government to actually warn the people, give the people right below the dam some fair warning so they could get their property out of there so they're not financially ruined or killed. That would have been nice. That would have been the right thing to do. This is why I don't trust any government. And some of them are worse than others. Okay, super chat from Abbey Road. Thank you for the super chat. He is also a Patreon account contributor. Since March, every day this year is more unimaginable bad news. I feel like I'm living in a Hollywood science fiction movie. What? What the F? Yeah, I totally agree, buddy. I totally agree. This is dystopian. Historically, we are headed along the path of the 1920s and 1930s with stagflation mixed in. Stagflation, tax, and lie mix in. And these politicians are talking about raising taxes too here in the U.S., whether it's Chicago property taxes or other politicians are talking about raising taxes, locally raising sales tax, all these taxes. Why should they need to? There needs to be shared sacrifice where governments cut spending, where politicians cut their salaries, and it's not going to happen. They're only going to make things worse. Super chat from Leon. Thank you for the super chat. He says, thanks for the great information. You are very welcome, Leon. It is crazy everything going on. And here we are with all these problems in China's economy. The dollar index, meanwhile, is down, which is really weird because the Fed's official balance sheet is not going up. So the dollar index is weak. It's interesting that the dollar index is barely holding above 96. We'll see if it gets... It hasn't stayed below 96 for very long, for a while now, so we'll see. We'll see if the dollar index rallies or not. The next stimulus checks are supposed to be agreed upon, hopefully in the next... Not hopefully. I'm not in favor of those. Although looting and rioting may increase anyway. The next stimulus checks might be agreed upon in the next couple weeks. So we'll see about that. But in spite of all the craziness going on in the Chinese economy, the exchange rate of the Chinese yuan still looks pretty good. It's not going to 8, the Chinese yuan, as of right now. It's not way above 7. Like last year, the Chinese currency, I think it got to 7.3. and people are really starting to panic. I was hearing from my sources inside China when the Chinese yuan, I think, got to 7.3 briefly, 7.3 Chinese yuan to the dollar. I think it was maybe July or August of last year. There was a lot of people in China who wanted to get their currency, their savings, out of China. They wanted out of the Chinese currency, but there's a lot of capital controls there. Now there's still people that can be paid for fees to help you get your savings out, especially into real estate. But so far the Chinese currency, the exchange rate's under control in spite of all this. But it isn't. You really should read the People's Bank of China comments, because they're really, really worried about the bailouts and the liquidity injections. They know that they have to pull the liquidity out. They'll put it in temporarily to prevent bankruptcies and runs on banks and an implosion of their financial system, but they're worried about the longer it stays in there, about the velocity of money and inflationary expectations picking up, and even worse, stagflation. So they want to pull it out as quickly as possible. It's interesting that they're talking about that, because if the Federal Reserve is actually honest about what happened in 2008, 2009, 2010, that's what they would have said. Okay, a couple more super chats here. $25 from Mike Belanger. Thank you for the super chat. Should someone hold cash, metals, mining, Bitcoin, or a combination to manage risk during this phase of the reset? Cash would be US dollars in case there's a stock market crash or some real estate you like goes on sale and you're willing to pay higher property taxes, but maybe there's good rental properties. Who knows, though, with the politicians, there might be rent control in some of these other cities and states, even more rent control. Yeah, I think that's a pretty good strategy. Are you also growing your income, though? So not only do you need to focus on being your own central banker with dollars and metal and maybe a little bit of Bitcoin and crypto as a hedge to those things, but also you need to be entrepreneurial. Because if they're going to tax, look, the way the economy is, they should not be taxing us more at all. So to maintain our standard of living, we're all going to have to figure out new ways to grow our income just to offset the taxes and the currency devaluation. It's not fair. It really sucks, but that's life right now. So what you need to focus on, I don't know your income situation, obviously. Oh yeah, please tap or smash the like button, because I have 400 people watching and barely any likes. Yeah, I would focus on income. Having a side business, having a side hustle, talk with friends and family. Maybe you can do like some type of in-person side business with family and friends where you can make a little extra. And then you have extra currency coming in to go and buy assets if they go on sale, or to offset the currency devaluation and taxes that are going to be coming. I think that's what most people don't talk about, is they're going to have to grow their incomes. You don't hear most other experts talking about that. But that's because I've studied a lot of past stagflations and end of empire, like currency devaluations with coin clippings, and people's standard of livings were just destroyed. The politicians just layered on more taxes. The small business owners had to deal with higher minimum wage laws. There was just a lot of problems all around. So you need to focus on just being anti-fragile. And the best way to be anti-fragile is to grow your income, have a new side hustle or side business. Maybe it eventually turns into a full-time business, like mine here, now that I'm having a little bit of success. Although who knows with YouTube. Not like I'm getting much in ad revenues now. But at least my Patreon's doing well. Yeah, so be your own central banker. Have some type of reserve stored in multiple asset classes with some cash in case there's really good assets that go on sale, like rental properties or stocks. Because if there is another stock market crash, it's probably going to be a short window before they do even crazier policies to try to knock the stock market back up. I mean, everything's so leveraged. I'm trying to get an interview booked. I've been speaking in emails trying to get Jesse Felder back on to explain the leverage short volatility trade. He has some interesting views on that. I'll see if I can get him on this week. Again, I'm speaking with him in emails, so hopefully I can get him on for an interview. Okay, super chat from Chen Mika. Thank you so much for the super chat. Oh, you're a golfer. Cool. Is that Taiwan's currency? I think it's Taiwan's currency. Thank you for your insight on your Patreon articles. Please talk about China's DCEP, digital currency electronic payment, and how it will impact the dollar, the world's reserve currency. Thank you. Is that the alternative to SWIFT? I haven't looked into that. Most of my focus about looking what China's planning is on crypto Yuan, so I haven't actually looked into the digital currency electronic payment. So I don't know if that's like China's alternative version to the SWIFT system, but China's trying a lot of different strategies, I would say. So whether that's the oil deals with Russia, where Russia gets paid in yuan, and then they issue press releases, and then Russia dumps all their yuan after they're paid in yuan for their oil, and then all the different programs that China's working on with their trading partners in emerging markets. The impact on the dollar, Mika, the impact on the dollar right now has to do, have you seen my dollar tug of war videos? That's the main impact on the dollar. What China's doing now with the dollar does not have it's not as much of a factor. There is a massive amount of dollar-denominated debt in China. There is a massive amount of demand for dollars in China. And with the policy decisions over the last month, the Chinese financial system, the People's Bank of China, and other regulators have tried to ring fence and prevent dollars from leaving their economy and their financial system. So I think that's what you need to focus on more. So maybe in the long term, they are looking at these different types of programs and trying to implement a bunch of different things. But in the short term, the more important thing, in my opinion, is the dollar tug of war and the amount of dollar-denominated debt inside China that can implode, which is why foreign corporations like Apple and many others are not allowed to take dollars out of China. Kyle Bass has said he hasn't named the corporation, but Kyle Bass says he knows for a fact that one large corporation that everyone would know has $10 billion of cash in a bank account in China, in the banking system, and can't take it out of mainland China. It is blocked. And Kyle Bass has said that $10 billion may never be able to leave China. So you have all the gold community and the Chinese government talking about abandoning the dollar, but I judge people their words versus their actions. Their actions are they need dollars. Their words are they want to dump the dollar and get rid of it. Their actions are they need dollars. So words and actions do not match. And with the Chinese economy and how the exports are not going so well, you have the cash flow problem there too. And now you have the flooding there, which is going to cause even more problems. So the Chinese government, the Chinese Communist Party, is dealing with a bunch of different things. So not just the global pandemic and the coronavirus, they're dealing with all these different problems. It is a lot to deal with. I would not want to be involved in any government right now, especially the US or China. It's way too much to deal with. There are way too many crazy things to deal with right now. I would not want that type of responsibility having to deal with all these things. So I would focus on the dollar tug of war, Mika. I think that is the main. Because for 10 years now, there's been all these press releases about China and Russia working together and, alternatives to the dollar. And the things that have been tried have largely been very unsuccessful so far. So it could take years before it could take years before any of these other programs or new program is effective. We don't know. Okay, last here super chat is the CPI if the consumer price index or CPI inflation is rigged, then how can we find out the real inflation rates and valuation? So the Austrian School of Economics has the Austrian True Money Supply. So you can look that up. There's a Forbes article writer who does this every month or two. So you can look up Austrian TMS, True Money Supply, or you can go on the Mises Institute website, and that's just monetary inflation. So that's how much currency and credit the Federal Reserve is injecting into the system. And the currency and credit, people are not just going to hold the currency. So that M2 rate, that's not just going to go into people's bank accounts. That M2, people are gonna, it's especially if you're not getting any interest in the bank accounts. So people will pay off some debt, but that money is going to go somewhere. And for over 10 years now, it's been going into asset prices mostly. Although, if Congress has its way, there will be more of that currency, and depending upon what happens with the Treasury General account, on how much of it is given out. Lynn Alden says 800 billion of the 1.7 trillion is planned to be injected before the election. That's a lot of spending. I don't, it's going to be very difficult for them to give out that quickly. Maybe not even $2,000 a month checks to everyone. I don't know. Maybe. Yeah, so the Austrian true money supply, you can look that up, but that's just the measuring the monetary base. Because remember, the Fed doesn't release M3 anymore, which is all the currency, all the different currency and credit. They stopped. And then you have the Chapwood Inflation Index. Now, the problem with the Chapwood Inflation Index, I don't think Ed Batowski has updated in a while. It might be 8 months or a year since he's updated. I think there was an update in 2019, but the Chapwood Inflation Index, he was expanding on John Williams of ShadowStats' work. So John Williams of ShadowStats, you can also, for the inflation rate, you can also go up to, to look up the inflation rate, a more accurate one than the Consumer Price Index. By the way, the Federal Reserve, according to Danielle DiMartino Booth, the Federal Reserve has admitted that their inflation statistics, the CPI, is bogus. She said internally that James Bullard and others were yelling at the people inside the Fed that their inflation statistics are totally fake, and yet they won't publicly admit this. Okay, well, that's it for this live stream show. I'm going to hopefully get to work on some of the Patreon stuff in the next couple of minutes. So definitely check there. It's only $5 a month if you want to look behind the paywall. There are a lot of articles, over 100, on a lot of different topics. Global macro, royalty and precious metal royalty and streaming companies, oil market, gold and silver. There's one lengthy uranium article about the risks. That uranium article that came out a couple months ago, I said the safest one was Cameco. Cameco stock is up a lot since that article. And the uranium price looks like it's starting to finally firm up and rally now that a lot of mines are offline. So hopefully I can crank out some more content for my patrons. And definitely like and subscribe to this channel. Okay, everyone. Have a nice night and a great week. Despite of all the craziness that's happening. It's just, isn't it really unbelievable? It is ridiculous, all the craziness that is happening right now. You couldn't make this stuff up. If you were a fiction writer, I don't think you could make all this stuff happening in only 5 or 6 months. You couldn't make it up. No one would believe you.